What is day trading? If you're new to day trading, you're probably confused. Uh, a lot of people, they refer to day trading as investment, and that is not the truth. Investment and day trading are completely different game. Investment, you're in it, you are a partner, you are with this company ups or downs. You might put money today. Some people with the retirement accounts and stuff, they start working at 25 years old, they put money that they wouldn't touch for another 30, 40, 50 years before they see that money again with the interest. A day trader, you don't have this kind of money. You actually want to pull your money out of the market, not put more money into the market. So you just want that volatility. You want to benefit from the stock is selling at 10, it jumps to 11, bam, you get your $1 per share and you get out before it crashes again and the cycle repeats. So day trading involves frequent buying and selling of securities throughout the trading day. You are between 9:30 if you're trading the New York Stock Exchange or the U.S. market, between 9:30 and 4 o'clock Eastern Standard Time. That's your trading day. You don't open before 9:30. You don't close after 4 p.m. And of course, day traders attempt to anticipate the next move, but as the name suggests, day trading is a short-term investment strategy, and the goal is to exit all trades by the end of the day. Contrast to this approach is the investment, like we said. When you buy and hold, I would say investors are a lot more successful than day traders. However, investors are not emotional in their buying and selling. Most investors don't even control their own account. They just put it into an index, and the index managers control that. Or they put it into a retirement account, and the insurance company or the investment company or the hedge fund invested for them. So if the market goes down, the market goes up, they don't check it every day. They don't check it every hour. They don't check it every 2 minutes or 5 minutes like the day traders do. But day trading is exciting and lucrative. It's effectively, you can consider it gambling. Gambling was an edge. Gambling as a casino. Technical analysis, as Mark Douglas said, technical analysis gives you the ability to be the casino, not the gambler, which means it gives you an edge. If you understand how to analyze the price action, you are the casino. Yes, you're going to have ups, you're going to have downs, you're going to have wins, you're going to have losses. But at the end of the sample size, at the end of the month, at the end of the year, you will be up in your account. You will have a rising, let's just say, equity curve. But also, it takes a lot of people's money. It takes a lot of people's money because they get into it without the fundamentals. It's like a guy trying to do a surgery without going to medical school, or a mechanic trying to rebuild an engine without understanding how this engine works. There's an alphabet to the stock market. Starts with the candlestick. What is the candlestick? How you read the candlestick. Then after you understand the candlestick, you can move to the chart. What is the chart and how you understood the price action on the chart. Once you understand price action, you can move into indicators. Once you indicators like moving average, simple moving average, other different exponential moving average, all of these moving averages will help you become the casino in that game. After that, you can move into other things like fundamental analysis, like market, like news trading, like anticipation trading, like what Mark Douglas calls it, intuitive trading. There is so many different stages, but you have to start from block one. You cannot just jump into it and expect to be successful, just like anything else. Day trading involves buying and selling securities like anything, like cryptocurrency, stocks, bonds, commodities, exchanges, which exchange trading funds, which ETFs, anything else, gold, silver, whatever you want to trade. Listen, I know people trade cars in a day, mostly, of course, with a wholesale dealership, wholesale dealer's license. But you can day trade anything in particular. Okay, day traders attempt to anticipate. You have to have some kind of conviction where the market is going. Just to let you know, the market overall over the last 100 years have a bullish trend. But in the intermediate or in the middle of these bullish trends, there is some downsides. So if you are a short, if your brain is fused to be a short, to short the stock market, or which means to sell, and that's how you make money. Because I was one of those. For some reason, I made all of my money from shorting in the beginning, and it became so infused into my brain. This is how I make money. But I'm trying to actually change that myself. So you have to have a conviction. You have to have a conviction of where the market is going to go. So, and of course, the chart and the technical analysis will actually give you a certain point of view for where the next move could be to risk. Unlike investment, this is very important. Unlike investment, you have to exit. This is a keyword. Exit all your trades by 4 p.m. by the market close. Now, if you're a cryptocurrency trader, that market is a lot longer for you. If you're futures contracts trader, that market is completely different, or currency trader. With profit or with loss. With profit or with loss. Holding no securities to avoid overnight risk. The biggest risk, I think, on Friday night, between Friday night in New York Stock Exchange, between Friday night and Monday morning, usually have the biggest risk. Could go up, could go down, in a very, because you never know what would happen those 2.5 days. So it's different from having 1 day of risk. Okay, so it's exciting, it's lucrative, but at the end of the day, it is gambling. You have to understand that. It's gambling with an edge. It's gambling like a casino, not the customer. It's you're gonna have wins, you're gonna have losses, but if you're a successful trader, you're gonna have more wins than losses, or at least the wins will be a lot bigger amount than the losses, because you're gonna be limiting your risk. As Marcus Douglas said, technical analysis gives us the ability to be the casino. Very important.